Okay, let's talk about Campari. It's a company born in 1860. Its founder was Gaspare Campari. He invented the original recipe of Campari. And soon after, he opened in 1904 its first plant in Sesto San Giovanni near Milan. And this is the actual headquarters of the company. In 1950, the company opened its first bar in Galleria Vittorio Emanuele II in downtown Milan. Since 1915, the company grew steadily and became one of the major players in the Italian market. But the very turning point is 1995, when the company decided to develop its actual strategy made by 50% organic growth and 50% external growth. Particularly in 1995, the company made its first acquisition of Crodino and Sinar, two major brands. And from then, the company started to acquire more brands. And in 2001, it's one of the crucial year for the company because it goes public and listed on the Italian stock exchange, and the company made one of the biggest deal of all time, acquiring Sky Vodkas. And since then, we have a long story of acquisition throughout the time. And as you can see here, we go from the 2001 listing on the Italian Stock Exchange to 2003, the acquisition of Aperol, 2006 Glen Grant, 2009 Wild Turkey, 2010 Fragelico, 2012 Appleton Estate, 2014 Averna, 2016 Grand Marnier, and the last but not least 2017 Bulldog Gin. Today, the company comprehends around 50 brands, which make ultimately one of the major players in the market today. Okay, let's dig into the financials analysis of the company. I will focus on the three main aspects: profit of the company, the asset to debt ratio, and the price to earnings ratio. I took all the data from 2006 up to the latest available, which is dated 13th of June 2018. Let's start with the profit of the company. We see that from 2006 up to 2011, we have a steady growth. Then from 2011 up to 2014, we have a decline in the profit. And from 2014 up to 2017, we see that the profits are skyrocketed. The company said that it will take strong financial foundation. We can see that using the asset to debt ratio that indicates mainly how much debt the company have related to its current asset. I take the data from current asset and current debt. I don't do this math on the total asset and total debt. As we can see here, we are basically looking for 2 or 3 values in order to say that the company is strong financially. So as we can see here, from 2006 up to the financial crisis of 2008, the company respected this ratio, but in 2008 and 2009, due to the crisis, the company probably got to sell off some assets in order to survive the crisis. But we see that immediately in 2010, we saw that the balance has been restored with a 2.28 factor. You can see here on the right how many assets and how many debt the company had throughout all this time. So we can see that basically from 2008 to 2009, the company got to sold some assets, but soon after that they reinvested the profit in order to continue the steady growth, as we can see here, and also acquire more assets throughout the time. And in 2015 we see that we have a massive a massive investment from the company. This means that they bought a lot of brand in this period, and from that point on we see that the debt constantly decreased while the asset increased. So this means that the company is solid. As we can see here, we have in fact our asset to debt ratio growing even to a 3.41 level. If we can see, let's go now and take a look at the price earning ratio. Tells how much an investor will pay for $1 or €1 of profit. And as we can see here, from 2006 we have a steady growth in the PE ratio. This means that the company is less attractive buying its share. Until nowadays we are definitely in a bubble territory. In fact, if we go to see the company price, okay, as you can see here, from 2006 we have this stock price of the company, and from 2009 to nowadays we have a very strong bull run, and that culminates in this ascending channel of the price. And right now, as you can clearly see, we are in a bubble territory for that. Let's compare the stock price of the company with the Italian index FTSE MIB. The company performed very well compared to the Italian index, and this means that the company has a solid growth. However, this doesn't mean that for now is a buy, because the price is too elevated. In fact, if we go, let's calculate the latest price earning ratio. We've got to divide the price of the stocks by the current earning per share, which at the the latest at the 13th of June 2018 is 0.13. So let's do 6.65 divided by 0.13, and we see that we're still at 51.15 price to earning ratio. So for me, this is not a bargain at the moment, and I will wait until the price decline or it goes into bargain territory, which for me means that it must have a price to earning ratio around 16 in value. That's all for Campari for now. Let me know if you want more information about the company, or maybe an update when the next financial report will be released on 6th of November according with the company website. Please leave me a comment, I will appreciate that, and if you like the video, give me a thumbs up. Next video will be on the same sector, only in different market, in this case the Asian market. Thank you for watching and see you next time. Bye.